Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This is where we get everything you need to know in 90 seconds at 9 o'clock, including news. It's all about currencies again today. The Kiwi dollar ended last week at an all-time high on the TWI at 77.68, as the Japanese yen fell sharply and dragged the Aussie dollar down too. That came after US non-farm payrolls grew in March by a level below every expert's estimate. The surprise knocked the New York equity markets and the US dollar, raising the Kiwi to a 7-week high against the greenback. At the same time, markets are absorbing just how massive the Japanese reinflation plan is, basically doubling their money supply in 2 years. The yen continued to weaken, ending the week at 82.25 to the New Zealand dollar, a level it has not been at since June 2008, almost 5 years ago. Realignments in exchange rates are on the mind of international leaders meeting in China too. Australia and China reported to be about to seal a deal where there is direct trade between the Chinese yuan and the Aussie dollar. Meanwhile, China is pressing Australia to relax restrictions on access to its huge sovereign wealth fund for big strategic projects in the country, something that would reinforce the Aussie dependence on China. China is making the same arguments with the US, but with less chance of success, it seems. In Europe, the focus has shifted to Portugal, where a court decision has undermined the undertakings their government has given to the ECB, EU and IMF to get bailout funds. They're in a difficult position and are considering paying government workers in Portuguese treasury bills rather than cash. The Kiwi dollar starts the week at 84.3 US cents, 81.2 Aussie cents and 82.25 Japanese yen, and our TWI is at a record post-float high of 77.7. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.